Welcome, everyone. You're listening to Fear-Free Passive Investing, where it's all about passive commercial real estate investing and the fears that new investors have when learning about it. We interview past newbie investors and experts about their experiences, as well as give you tips on navigating different investing strategies. We believe the best things in life are on the other side of fear. So let's face those fears and jump right in. Here's your host, Lucas Miller.
Hey everyone, welcome back to another episode of Fear-Free Passive Investing. My name is Lucas Miller, and I'm really excited to have you here today. We have a wonderful show today. We have my good friend Travis Watts on the show. If you don't know about Travis, he's a full-time passive investor. He's been investing in real estate since about 2009. He's got multifamily, vacation rentals. He does syndications now. But the majority of what he is invested in now is multifamily syndications. He's also the director of investor relations for Ashcroft Capital. He's invested over 27 different syndications between a bunch of different firms. So he has a ton of wealth to share with you about passive investing, and we get into some really good topics. But first, I just want to welcome everyone who has just joined. This podcast has really grown in the last couple months, so I just want to say welcome. My name is Lucas Miller, as you might know. The contact information to get in touch with me is in the description or anywhere you can find us on fearfreepassive.com. I look forward to talking with you all in depth, and I'm really excited to get into today's episode. So without further ado, let's welcome Travis. All right, Travis, welcome to the show, man.
Thanks so much for having me, Lucas.
Yeah, I really appreciate it. It's been a long time coming. I've been trying to get you on for a little while now. You've got such a good story about I think what a lot of people want to be as far as passive investing. And so I just want to bring you on and share your experience, how you went from a full-time employee to now being a professional passive investor. So for those who might not know, could you just give us like a little bit of backstory about who you are, what you did, and now what you're doing?
Yeah, absolutely. So I jumped into the real estate space as probably a lot of people do with single family homes. At the time, that's all I knew. If you were to, I didn't have a mentor or a big network, and I hadn't been to a lot of events. You don't know what you don't know, right? And so I had the intention of being a passive investor. I went about that the wrong way. So as I'm starting to scale this single family thing, I start getting distracted and doing fix and flips over here and doing a vacation rental over there. And then all of a sudden, I don't know what I'm doing. And, long story short, it certainly wasn't passive. I was working 100-hour work week with a W-2 job on top of all of that.
Wow.
And so I had to just come to that realization that this model's not scalable. This investing is not passive. And I've got to find something that's a little more in line with my goals. And so I had to really get some clarity around that. And so now today, fast forward to now, a full-time LP syndication investor. That's about 80% multifamily, 20% alternative types of syndications that produce income and cash flow.
That's awesome. So you wanted to maybe scale back your W-2. So you decided, real estate's a good way to do it. You got into some single family homes, you got into some residential stuff, and just that wasn't working for you. What made you decide real estate was it though? Like I want to take a step back and just like, what made you look towards real estate?
Yeah, I had read some books early on, and back when I was in high school, my dad, he's a big garage sailor. He was out at this garage sale and I was visiting that summer, and he picks up Rich Dad Prophecy. He didn't know who Robert Kiyosaki was. He didn't know Rich Dad Poor Dad. Whatever. It was just totally random, but it seemed kind of interesting. So he gets me that book and gives it to me that summer. I've always been a big self-educator. And so I actually read the book, and then from there, that just kind of planted a seed. The only thing I really took away from Rich Dad Prophecy was we're going to have the stock market meltdown at some point. We don't know when, but the fact is, don't be in stocks. That was basically all he had to say in that whole book. So I'll save you the time if you haven't read it. And so basically, that's what I did. I had some stocks. I didn't have a lot, but I had everything I did have that was investable was in like a brokerage account. that was supposed to be used for college, by the way, and I never did that. So, but anyway, so I sold all into cash, right? And, contrary to everybody's thoughts back then. So I had a little lump sum to start with when 2009 rolled around and real estate out in Colorado had dropped, 30, 40%. And all of a sudden it's just kind of that alignment. I had a little bit of liquidity. I had a little bit of knowledge, and that was just a good time to get in to the single family space. So I did.
That's a great time to get into the single family space. I mean, couldn't have timed it better.
Some
I'm sure
luck.
I'm sure it was really scary back then too. Like it wasn't like, we had just seen a huge financial meltdown.
Right.
Basically centralized around real estate, and you had the fortitude to jump in to something that a lot of people were scared of.
Yeah. And that's this, a lot of people say, oh, 09, that was a great time to jump in. We didn't know where the bottom was in 09. Like no one knew if it was going to drop another 30% or something crazy, right? It hadn't bottomed out. So I did have to take a leap of faith. I did have to just basically look, again, I didn't know what I didn't know, but here's what I did know. The condo that I bought, it was just a condo in Fort Collins, Colorado, had previously sold for $170,000, and the seller was wanting 95. That's what I did know. And I just thought, based on that, regardless if the market continues down, I can afford that. And I know I can cash flow that. And it just made sense on paper. So I just went ahead and took the leap of faith. And shortly after it had bottomed, and several years before we started getting equity and a return of the market. But anyway, that's my story.
So you invested in some single family homes along the way. You started to get a little equity, and then at what point did you decide to make the switch to multifamily or to passively investing, like true passive investment, not the the landlord passive?
Yeah, right. So a lot of people ask me, would you have started out passive? The answer would be, I wanted to, but with lack of capital, it's hard. So would I have taken, let's just say 20K, that's my whole, net worth. Would I have taken 20K and gone passive? No, like that doesn't make sense to me. It wouldn't have motivated me, right? Here you got $10 a month passive income. How motivating is that? And so, no, you need to have some capital saved up, and if you can cross an accredited threshold as an accredited investor, that's even better, because now a lot more opportunities are thrown your way. But here's what I had to do. I was literally, it was a burnout. Like I felt like I was hitting rock bottom. I was burned out with my job. I was burned out with real estate. Like just things weren't working the way I wanted them to work. And I was desperate for a change. So what I did was I took an Excel sheet and I took all my single family homes, including the house I lived in. And I said, if I sold everything and I went complete liquid to cash, and then I took all that money and I invested passively in syndications, 50K here, 50K here, 50K here. What would that amount to conservatively in terms of cash flow and income? What I realized was it was enough to quit my job. And at the end of the day, I just wanted to quit my job. So that's what I did. And that was kind of the beginning of the end, so to speak.
I love it. So what year was that?
So that was 2015. And so it didn't happen overnight, obviously making a huge transition like that takes time. So I had to put properties for sale. I had to wait till leases were done. And, and then it was just one syndication at a time, here and here and here. I could like sprinkle effect. So I had to be very patient, which I'm not very patient. And so that was a struggle in itself. But so over the next, year and a half, whatever it was, that I went fully into being passive.
So did you do any sort of 1031 exchanges, or did you just sell, take proceeds, pay taxes, go?
Yeah. So that's another big learning curve, right? So I didn't get into real estate for the taxes when I first started, right? The intention was to make money. Well, I come to learn that, equally important is saving on taxes. Like that's a direct ROI in itself. You reduce your taxes by 10K. It's the same as making 10K. It's 10K at the end of the day in your pocket. So no, I didn't do 1031s. Maybe I should have. But again, that's self-education a lot of times, and that's books and reading. And I just didn't have those resources then. I do now. And so, yeah, I would have done some things different, but no,
Yeah.
I didn't do 1031s.
Take us through the idea of how you made that mind shift change from buying these single family houses to going completely passive. And how did you find out A, what a syndication was, and B,
Mm.
who to invest with? Because there's not a lot of
Mm-hmm.
options back in 2015.
Mm-hmm.
There weren't a ton,
Mm-hmm. True.
in the
True.
and I don't know if you were accredited back then or not, but that was just starting the phase of being able to accept non-accredited investors. So it was even
Mm-hmm.
slimmer back then. But yeah, take us through that.
Yeah. Yeah, exactly. So I first learned about syndications through, I started to reach out in desperacy, right? I started just asking everybody I knew, like, do you know of any books to read, or do you know anybody that's like, a big wig in real estate, or specifically, I didn't know what I was asking. And so then I started going to some real estate meetups. I started listening to, podcasts, reading more books. I just started expanding altogether. I went through this crazy phase, man. I'll tell you this, I don't share this a lot, but in 2015, which was that year, I set a goal to read 52 books that year, which is insanity, but I learned how to speed read, and there's a couple things that kind of led to that. And I did. So I read 52 books, most of which were self-education. I'm not talking about reading Harry Potter. It's
Right.
just more of like the rich dad stuff and other apartment investing and blah, blah, blah. So that was a massive eye opener. So I don't know exactly, like to pinpoint exactly. It was probably in like a real estate group, or I probably heard it a few times that this was the thing that
Mm-hmm.
existed. And prior to that, if someone would have said, why don't you invest in apartments? I would have said, yeah, when I'm a billionaire, right?
Yeah.
Come come give me a call. I didn't think that was in my reality. But then like you said, I mean, the Jobs Act and changing all the stuff with accreditation. I mean, just there was a lot happening, and crowdfunding popping up and all these platforms. So yeah, so I had heard about it through the just self-education resources, networking, stuff like that. How to find sponsors, man, that is a difficult one, because as your listeners probably know, a lot of people are doing 506B offerings. It's a
Mm-hmm.
regulation 506B versus C. So you can't generally advertise a deal. So it's not as simple as just go to Google and send me a deal or something. They're just hard to find. So I did that through personal networking. Back to the self-education, I've always just liked the idea of going to conferences and
Yep.
just meetups and just stuff like that. And that's where I really found the most value in the beginning of finding deals. Then word of mouth gets around, and this person tells you about that person, and then that leads to these two operators. And now I'm like on everybody's deal list. I get a deal a day, whatever it is. And so now it's kind of the opposite problem. It's like trying to weed out all the deals and all the sponsors and figure out
Mm-hmm.
who I don't want to invest with. That's kind of my problem now. So yeah, that's kind of how that evolved.
Take us through some of your fears that you had when you first made that initial wire, or were considering
Mm.
it. What was going through your head? Were you scared? Were you confident? Were you just ready to get it over with?
Yeah, I'll be honest. I thought it was too good to be true. And I'll tell you why. I'm looking at a pro forma, and I'm looking at this 5-year plan, and I'm looking at these IRRs that are like double your money in 5 years. I'm thinking, I'm not doing that in the single family space. I'm not
Mm-hmm.
getting these returns doing all this work and all this heavy lifting and all that kind of. So I thought, how could I be getting a better return not doing anything? That just doesn't sound reasonable.
That's
So
awesome.
I was skeptical, man. I was. And so yeah, I think it was my first investment was 50K, which was the minimum.
Mm-hmm.
And it was a leap of faith. Like, it comes down to, you can't know everything, but you can be confident enough and educated enough to just take the first step. You know what I
Mm-hmm.
mean? And that could be applied to anything in the world. But that's basically what I did. I did make some mistakes, here and there in the beginning, not huge ones, thankfully, but I just knew enough to get started. And so I did.
How did you educate yourself? You mentioned you listened to podcasts, you went to rehab groups. What other
Mm-hmm.
resources did you use to get up to speed on something that's pretty complicated for a lot of people that might be coming from
Mm-hmm.
the single family home space?
Yeah, yeah. Something that I think more people should be doing, which is asking the sponsors a lot of questions. You know,
That's
I
right.
don't know what that is, but like it's this thing of like you listen to a webinar and then like that's the end of the story, right? You make a decision, and it's like no, get on the phone and talk it through, right? Write down your questions, and there's
Yeah.
got to be more to it than that. That's like pre-scripted stuff a lot of times, and it's fine. It's great education, but I just started watching a lot of webinars. I started joining a lot of Q&A calls. I started asking a lot of questions directly to sponsors. And the first couple of groups I did deals with were local to me. So I met up face to face,
That's
and I
right.
also recommend that if possible. I recognize if you're in California and it's a New York deal, like, okay, you don't have to go buy a plane ticket, but do a Zoom call. It's
Mm-hmm.
free.
Mm-hmm. Yeah, that's a good point. And I remember you talking about that when we first met, how you did some local groups, and I thought that was so cool because I never really had that chance. Like we're both in Denver here, but when I got into it, it was the yields weren't quite there here locally, and it just wasn't
Mm-hmm.
possible for some of that stuff. But I totally recommend meeting someone face to face just once, even, and if not, do a Zoom call like you were saying. There's so much that can be communicated just through facial recognition. Like, you know,
Mm-hmm.
there's a lot to be interpreted over the phone, and I don't really like that. So,
Yeah.
I guess what I want to get to the point of is you had the problem that you were overworked, burnt out, things weren't working for you. You decided to make a change, and you took that leap of faith. How would you inspire other people to do that? If they're feeling the same burnout that you are, what would be the first couple steps you would give them?
I always, 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 always start with self-education. It's got to start that way. It just has to. It's foolish to go, your buddy tells you, "Hey, go jump into Bitcoin and put 10K in it." That's foolish, man. Don't do it.
Yeah.
Don't do it. I almost fell for that, by the way, when it was like 20,000, then it dropped to 10. So don't
Oh,
do it. But so you invest in things that you know and understand and stuff like that. So you don't have to be an expert. You don't have to be a guru. You don't have to bring all these 10 years experience with you to be an LP. But what you do need to recognize is like you pointed out, maybe the numbers weren't making sense in Denver. So know enough to recognize that and say, well, let me look at other markets. What markets are doing well, where the numbers work. And then you
hmm
start to learn that there's, whatever, Dallas and Phoenix and Atlanta and whatever, where
right.
there's just other opportunities. And so that's the quote I love is, I think it's the real estate guys, live where you want to live, invest where the numbers make sense. You don't have to
Yeah.
do a deal in your own backyard. That's the
Yeah.
bottom line.
That's great advice. Self-education is so critical no matter what you're doing. If you're good at self-education, which it sounds like you were reading 52 books a year, like that's crazy.
That was just
But
1 year, but yeah.
yeah, but like that's the perfect thing you could do for someone in your situation. You don't know what you don't know, and so it starts with self-education. Um, so on that same line, let's talk about current sponsors. You're talking about how you get a deal a day. You're trying to figure out who you want to work with, who you don't want to work with.
Mhm.
Take
Yeah.
us through some of the ideas of who don't you want to work with, or another way of putting it is, what are most sponsors doing wrong according to
Mhm.
you?
Yeah. Yeah. Good question. So I guess some of the lessons learned were I was taking overviews, right? Pro formas and projections at face value initially and saying, wow, these returns seem incredible. And theoretically, they would have been with the right sponsor behind the scenes. But what I found was so you're trying to match up the difficulty of the business plan with the experience level of the team. I mean, just to try to simplify it, right? So
That's a good
some of the
point.
first deals I did were like these really heavy lifts where they're going in and they're gutting the units down to the studs and they're coming back with a full new product. And the fact is, it was a large community, one of these deals, and this team had never done it before.
Mm,
And while lack of experience, I understand everyone has to start somewhere, but why not have somebody at least on your team that brings the experience, or maybe a mentor or a consultant? There's a lot of these programs where you can have someone kind of over your shoulder and you can kind of leverage their credibility to kind of put your deal together. What I don't like to see is a brand new group with no experience doing their first deal without a team and without mentors and without, it's just like they read a book and then tomorrow they're raising capital. It's like, it's just a red flag,
And they're doing that with your money.
They're gambling off your money, and they're going to see it's an experiment, You'll see how it goes. So anymore, I just invest with a lot of groups with track record, with experience, where I can look back and say, oh, you've done whatever, 15 deals, and they're all relatively the same type of deal. And it's mostly kind of a light value add plan. You're not having to reinvent the wheel here. You're just slapping some paint on it, putting new appliances in, whatever you're doing. And you can just prove to me that there's a history that you know how to do that, that there's enough connections in your network to pull it off. So that's what I look for now more than anything. So I started kind of hyper diversifying among all these different groups. Now I'm kind of honing back into like, here's the 5 I really like to work with.
Okay. That's really good advice. I think one of the biggest problems that I have been told from passive investors that are just starting out is, think of a way to put this nicely. They don't really know who's legitimate and who's not. Like you were saying, like you got to have a track record on your team. Sometimes it's hard to see below like some shiny pictures on an OM or on a offering memorandum or prospectus, and figure out who's actually legitimate and who's not. What are some questions that you as a potential LP can ask the sponsor that might cut through some of that BS? I mean, just to be straight.
There you go. It's hard to be nice with that question.
Yeah.
No, I hear you. So the first couple of things that we talked about are meeting face-to-face if possible, doing a Zoom call if possible. Here's the fact. Fact is, if you decide to partner up with someone, they are becoming a business partner. You are actually taking your money, handing it to that person and saying, boy, I really hope you make the right decisions on my behalf for the next 5 to 7 years, right? That's a big commitment. So you better be sure you get along with that person. They communicate well. They're very transparent. They're very upfront. They're not trying to say, oh man, I got 20 years experience in this industry. But what they mean is in single family, and that they've never done a syndication, right? You got to read between these. You got to ask those questions. Oh, cool. You have 20 years experience doing syndications or what? Doing B class, doing C? How many units on average? You've just got to be asking the questions, and then looking for those red flags of not being transparent and things like that. So that's what I look for first and foremost is, do I even want to be a business partner with this person? I don't care about your deal. You might tell me you're going to double my money in 12 months. Cool. But I'm not doing the deal until I know you and I can trust you. And then we'll talk about the deal. The deal kind of comes last to me. It's vetting the group, the sponsor, it's vetting the market, and then it's vetting the deal. The deal comes last. And so that's flipped to what I used to do. And those were some of the mistakes I made.
Well, and that's flipped from what I perceived passive investors wanted to hear about when I first got started. First, I thought it was like, oh, I just got to get really good at the pitch of this deal and money's just going to pour in. In reality, the deal comes, like you were saying, either second or last or certainly after preservation of capital. Like that's what people are worried about. They just want to know that they might possibly have the chance to get their money back. And if they know for sure it's not going to happen, obviously that's not fair. And the returns come after that. And so I think that's a good lens to, and frankly, that's one of the reasons why I started this podcast, is just to kind of gain insight from passive investors on what fears that they had that sponsors were addressing well and what they weren't addressing well. And, it's a resounding theme that getting to know someone, creating a relationship, really becoming friends before partners is something that is critical.
And back to just like the laws, right? And the SEC, I mean, at the end of the day, like what the SEC wants to see is that no matter if you're doing a B or C or an A or whatever regulation you're under, is that you have this relationship formed. It's not necessarily required under some of those, but you should. I mean, you're doing business with people and you're transacting and you're taking ownership of give me your money and I'm going to hopefully get you a return. You should know the person. a little bit,
Yeah.
at least like goal wise or just on a personal note, a few things about them. So, I think it just starts with that, just getting to know and trust like you would anybody else, right?
Yeah.
Think of it just like a friendship, right? I mean, if you had to be committed to someone for 7 years to be, best buds, or at least good friends,
Yeah.
you're going to ask some questions. You're going to seek a little bit, on the front end. And so I recommend everybody do that. I don't think a lot of people do.
Yeah. Yeah. And I think a lot of people try and rush into it too. And, it really just
Mm-hmm.
takes time. Like I say, there's always another deal.
Yep.
You should never feel
Yep.
pressured to jump into it. And the sponsor should never feel pressured to take your money either, frankly.
Mm-hmm.
That
Yeah,
relationship goes both ways too. So,
it does.
um,
It
yeah,
does.
that's great. So just wrapping up here, I want to ask you, what advice would you give to someone who's scared to take that first leap of passive investing or maybe real estate investing in general? I think I
Mm-hmm.
know the answer, but I would love to hear what you would tell them in
Mm-hmm.
today in March now of 2020.
Yeah, I got you. Well, a lot of talk about recession, a lot of talk about the economy, where we're headed. It's been a great bull run. What about the next five,
Mhm.
10 years? Something to consider for sure. And so, just to make it simple for your listeners, and that's what I do, I am a high level individual for the most part. I can get analytical and I can crunch numbers when I need to, but here's kind of how I look at it. Let's talk about like a market example. So I'm going to look at, where are people moving from, where are people moving to, where are jobs relocating to, diversification of jobs. Like you can Google all this stuff, right? Literally
Mhm.
spend 2-3 hours max. Now you got your answers. Decide on some states you like. Now from there, you can't memorize every submarket. You can't memorize median income in the 3-mile radius of Irving, Texas. So leave that to the sponsor to
Yeah.
fill in the gaps. Okay. Know that you like Texas in general. Just know that. And then when a deal pops up in Lubbock, Texas, you may not have to know anything about it, but then listen to what they have to say about it. And if that makes sense to you, that might be an opportunity to participate in. So again, back to what I said earlier, get 70% of the way there just in philosophy and concepts, and this will help me achieve my goals, just high level, big picture. And then you can't know 100%. No
Mhm.
one knows 100%. And if you wait till you're going to be 100% sure, you're going to miss it all. You're going to miss out on everything. So you just don't take that approach and just know most and then get started, basically.
I mean, that's phenomenal advice, frankly. So how many passive investments have you done to date?
A little over 27, it's probably 27 to 29, somewhere in there. Yeah.
Okay, so you know a little bit about what you're talking about, in other words. People should listen to you. So, I mean, that's great advice. I love the idea of you don't have to know every little thing about this because, frankly, if you zero down into, like, for example, Lubbock, Texas, and a deal comes available in Abilene, you don't want to have that scarcity to say, oh, I'm afraid to jump over here now that I know Lubbock so well. Like just be open to new things, know exactly what you're looking for as far as like job diversification, population growth, but be open to new markets. Is that fair to say?
Yeah, absolutely. Yeah, absolutely. I just, again, decide on like regions or states or, have your reasons for knowing why you like certain areas. Maybe it's because you live there. If you happen to
Mm,
live in, Dallas or something, maybe that's why, but yeah. And then let the sponsor fill you in on all the details. Cause quite frankly, that stuff changes too, right? Like if you study Lubbock today and become an expert, what if you see a deal in 12 months? Well, things have changed. What's the
yep,
rent forecast now? What's the economy like now? Well, it's
that's a
almost like
great
you got to
point.
go back to the drawing board. So just
Yeah,
don't waste your time.
that's a great point. Travis, I can't thank you enough for all the advice and sharing your time and just helping us out, get past that fear. So if people have questions, where can they reach out to you?
Yeah, email's probably best. So you can reach me at Travis at ashcroftcapital.com. There's also, by the way, I didn't mention this, a free passive investor guide that talks about a lot of these things that we just discussed, vetting sponsors, vetting markets, vetting deals. That's at ashcroftcapital.com /passive investor. And anybody listening can feel free to reach out on LinkedIn, Bigger Pockets, Facebook. My name is Travis Watts, Watts, and be happy to connect and just talk about anything real estate.
Awesome. Yeah, we're really glad to have you here. I'll put all those links at fearfreepassive.com so you can go get your copy of this free guide and reach out to Travis with any questions. So with that, we will end there, but thank you so much. Can't wait to talk to you again.
You bet, Lucas. Thank you.